Hello, I'm Chad Spearman with the CattleFax Closing Bell, brought to you by Pfizer Animal Health. Corn stocks levels are historically low both in the U.S. and around the rest of the world. Corn prices have settled back off the summer highs as 2012 comes to an end, and there are signs of some rationing, especially on a domestic basis. U.S. export sales are running at the lowest levels in over 20 years. Ethanol production levels are also running well below 2010 and 2011 levels, and reduced usage levels from the livestock feeding sector are expected to continue into 2013. However, plenty of uncertainty remains, especially as the month of January approaches, when the fresh fundamental data will be released. July 2013 corn futures have worked seasonally lower from the summer highs above $8 to recent lows near $7 per bushel. From a seasonal perspective, July corn futures prices tend to remain under pressure into early December, followed by renewed strength into the first quarter. The strength can be found in the seasonal price indexes, whether measuring the past 5 years all the way through the past 30 years. The fundamental news in January will include the final crop production estimate for U.S. corn and the quarterly grain stocks report. If 2012 U.S. corn production is revised more than 150 million bushels lower, the bullish bias could quickly resurface. The stocks report will determine what the level of corn usage was during the September through November 2012 timeframe and whether or not current usage projections by the USDA are on track or not. If U.S. corn production is only revised moderately lower and the stocks report indicates that feed and residual usage is near current expectations, then the 2013 July corn futures contract is expected to meet stiff resistance between $7.65 and $7.85 per bushel, and major support is expected to hold between $6.85 and $7 per bushel into April. The fed cattle market was largely untested at press time this week. Kansas was the exception, where trade was established at $124 per hundredweight, which was $1 lower than last week. Box beef was softer on the week as holiday demand began to wind down and sellers reported ample inventories of end cuts. Demand will traditionally slow from here into year end. Feeder cattle prices were steady to $2 higher, while calves traded in a full range of $5 higher to $5 lower. Demand for all replacement cattle is excellent at the current time. Slaughter cows were steady to $2 lower, and supplies continue to decline past the fall run. Corn prices softened this week as concerns about demand pressured price. The USDA will release the monthly supply and demand revisions next week. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.